Every single day, while you're paying your premiums on time, someone is staging a car crash. Someone is burning down their own business. Someone is faking their own death. And you're the one paying for it. Insurance fraud costs $80 billion annually in the United States alone. That's not a typo. $80 billion. To put that in perspective, that's more than the GDP of 120 countries. Here's what nobody tells you. Insurance fraud adds $400 to $700 to your annual premium. Yes, your premium. You're essentially paying for someone else's crime, and most people have no idea it's happening. But here's where it gets interesting. Insurance fraud isn't just about dramatic Ocean's 11 style heists. It's happening in ways so ordinary, so mundane, that it's become normalized. And the numbers are staggering. Let's break down where this $80 billion actually goes. Workers' compensation fraud accounts for roughly $30 billion annually. Employees faking injuries, doctors billing for treatments that never happened, and employers misclassifying workers to lower premiums. Auto insurance fraud, another $29 billion. Staged accidents, exaggerated injuries, and phantom passengers who mysteriously appear after crashes. Healthcare insurance fraud adds $68 billion when you include Medicare and Medicaid fraud, making it the single largest category. Property insurance fraud costs about $5 billion, with homeowners burning down properties, staging burglaries, or inflating claims after legitimate disasters. Now, here's how it actually works on the ground. The swoop and squat is disturbingly common. A car full of fraudsters swoops in front of an innocent driver and slams on the brakes. Boom! Staged collision. They file claims for injuries that don't exist, often working with corrupt doctors and lawyers who take their cut. Then there's paper car fraud. People insure vehicles that don't exist, file claims, and disappear with the money. In some cases, they'll insure luxury cars at addresses in low crime areas while actually keeping them in high theft zones. Premium fraud is even simpler, lying about where you live, how much you drive, or who's driving your car. These soft frauds seem harmless but cost insurers $20 billion annually. The most elaborate schemes involve organized crime rings. They stage mass casualty events, recruit dozens of fake victims, and file hundreds of fraudulent claims simultaneously. One such ring in California defrauded insurers of $150 million before getting caught. But here's what makes this a crisis: the ripple effect. When fraud goes up, insurers raise premiums for everyone. Those higher premiums mean some people drop coverage entirely. That means more uninsured drivers on the road, which drives up costs for insured drivers even further. It's a vicious cycle. In states like Florida and Michigan, where fraud rates are highest, drivers pay nearly double the national average for auto insurance. That's not because of bad roads or weather, it's because of fraud. For businesses, inflated workers' compensation costs force companies to cut jobs, reduce wages, or relocate to states with lower insurance costs. So, how are insurers fighting back? Artificial intelligence is now analyzing millions of claims, spotting patterns humans would miss. An AI might notice that a chiropractor bills for the exact same treatment duration for 50 different patients, a statistical impossibility. Predictive analytics can flag suspicious claims before a single dollar is paid. Social media investigations have become crucial. It's hard to claim a debilitating back injury when you're posting skiing videos on Instagram. The National Insurance Crime Bureau maintains a database of known fraudsters, and sophisticated data sharing networks help insurers identify repeat offenders who file claims with multiple companies. Here's the uncomfortable truth: insurance fraud is so widespread because prosecution rates are incredibly low. Most fraud cases never see a courtroom. Why? Because investigating and prosecuting costs more than just paying the fraudulent claim. This creates a counterproductive incentive structure where fraud is low risk, high reward. The FBI estimates that less than 15% of fraud cases result in prosecution. And when fraudsters do get caught, the average jail sentence is just 17 months, with many receiving only probation. $80 billion annually. That's $219 million stolen every single day. Why you're working hard and paying your premiums honestly? Someone is gaming the system and you're footing the bill. The next time your insurance premium goes up and you wonder why, now you know. The question is, what are we going to do about it?